For this week's Smith Business Close-Up, we're on location at the University of Maryland. We are joined by Emanuel Zur, who is an assistant professor of accounting and information assurance. Thank you so much for being with us.
Thank you for having me.
We want to talk about the repatriation of U.S. companies' overseas profits. How big an issue is this?
It's a huge issue because until now people show that like over $2 trillion of cash is shifted outside the U.S. And
Trillion, it wasn't billion, that was trillion.
Trillion dollars is shifted outside the U.S. and is not being taxed. And that's why we see a lot of the big companies having a very low tax rate, ratio. They pay 3, 4, 5% tax because most of the income is shifted outside the U.S. The issue is, what do they do with the money and can they bring it back? And that's where I guess the loophole in the tax law is. They are not supposed to bring it back without paying taxes. They do not pay the 35% tax rate of the US, but they do just pay the difference. So if their cash is in Ireland where it's 12.5% tax, they need to pay, when they bring back the cash, they need to pay the difference between the 35 and the 12.5, which is a large amount of money. However, we found, there are anecdotal evidence, and we found in our research that it's kind of consistent that they do bring the cash back to the U.S. without paying tax through different loopholes of the tax code. For example, tax-free reorganization. So a company can reorganize itself and not pay tax, and they are doing so. However, the reorganization is really just an acquisition of domestic company, American company, without paying tax. So instead of using the cash that they have in the U.S., they just bring the cash back without paying taxes.
Is this money that was earned overseas?
We don't know, and I guess the definition of earning is very fluid, especially because if you see most of those companies are pharmaceutical companies, they are high-tech companies, where it's hard to define where, because a lot of it's depend on where the R&D was done, where is the patents are registered, and that's how they manage to shift. So they are very sophisticated in shifting out the cash. And they pay a lot of money to consultants, lawyers, and accountants to shift out the money. And that's why the earning, you don't really know. If they're selling a drug they're selling it here in the US, but the drug is registered in Switzerland, where is the income? Based on this, a lot of it is in Switzerland because that's where the patent is registered.
How big an issue is the US tax rate? You mentioned, I think, Ireland at 12% and the US at 35%. Is that generally how it is?
Yeah, it's a big, the US is one of the highest, if not the highest tax rate now. A lot of the European countries, not to say tax haven, Gibraltar and places like that where it's zero, but a lot of the big companies like Switzerland, Ireland, England, they have very low tax, and that's how they're trying to attract investors and companies into and that's what eventually those companies, the US companies, they are competitive. This is a competitive market, so they want to make the money. They don't want to be in disadvantage compared to the pharmaceutical companies abroad, and that's why they need to shift the money. And I think a lot of the people agree, in both sides, Republican and Democrats, that it's high. The question is how to solve the problem, and that's usually. Although, I have to say that, at least based on recent, I think everyone agrees across the two parties that closing those loopholes is one of the necessity to save the tax and to bring tax back to the U.S. because this is a loophole that is against the intention of the law. So, and that's why it's not illegal, but it's against the intention of the law.
It sounds like the only people who would be happy with the status quo are the lawyers and the accounting consultants that you mentioned who, through their expertise, can save companies a lot of money. What is a better solution?
So it's hard. The government is trying to close those loopholes, but as you say, lawyers and accountants are very, very sophisticated. So, for example, there was a very big deal of IBM that they saved close to $2 billion on a $12 billion acquisition in 2008. 2 weeks after, the government came and closed these specific loopholes. But again, the same loophole eventually, until now, they're still trying to close it by adjusting the law. So the right way, I would guess, is just to redo like the entire like tax law, which is really hard. In addition to changing the law, now the IRS is also taking those companies to court. So there is now like one of the first courts against Illinois tool workers. It's a big company that tried to do an acquisition of like $400 million. And the IRS is arguing this is an acquisition. It's not like restructuring, it's an acquisition, so you have to pay taxes. And that's what they are arguing. That's the intention of the law. You need to follow it. Even though you manage to find this loophole and argue that it's restructuring, that's not the intention of the law. So that's why you need to pay. Eventually, it's need like a very big work on the tax law just to solve all those problems. But like they're trying to do it step by step. And I think there is a lot of support in the government to try to close those loopholes.
Very good. Emanuel Zur is an assistant professor here at the University of Maryland's Robert H. Smith School of Business. Thank you for being with us.
Thank you.